Market commentary of the day. And right now, we're taking a look at what investors are saying may have an opportunity to do something that probably didn't seem possible earlier this year. And that's buying the dip on Nvidia. Shares of the AI juggernaut fell sharply earlier in the month following the U.S. government's announcement of new restrictions on exporting AI chips to China. Now, investment bank IBBA is advising clients to buy, saying in a recent note that the stock's decline has, quote, fully priced in the China restriction effects or is very close to doing so. The analysts have a $600 price target on the stock, pointing to a 40% upside on the share price. So they are acknowledging, yes, it is a headwind here for Nvidia. In terms of the degree of that headwind, at least in terms of IBBA, they think a lot of that has already been priced into the stock. We heard from Nvidia earlier this week saying that the accelerated licensing requirements they don't think are going to hit results. The licensing requirements were originally set to be effective after a 30-day period. They're now effective immediately. They don't see that materially changing the near-term meaningful impact on financial results. But of course, the question is what that longer-term impact looks like. And at least from this analyst perspective, they still think it's attractive at these levels.
Yeah, I mean, for Nvidia, it's been one of the runaway stock stories of 2023. And one of the things that is next to consider for anyone who has already invested in or is thinking about, even at this point, buying the dip, as this analyst is pointing out the opportunity to do, you've got to think about what's going to come next. And of course, there was the most recent deal, or at least partnership, that was announced with ARM. But there's also the language models that still have yet to come to light here, where Nvidia has already earlier this year talked about some of the large language models that they're going to leverage and bring to light here, whether that be in life sciences research and development, whether that be in how they're going to be able to kind of supercharge different discovery pipelines, either in that arena or in other areas. I think for exactly where Nvidia moves forward from here, you think about the three pillars basically of this larger generative AI landscape. And it is the models that sit kind of right in the middle, but on top of those models, you've got the applications. But at that bottom end, and where Nvidia has really been able to capitalize on the demand, is the chips. Getting the chips right so you could have the models that sit on top of them, so that you can have the applications that then run on those models as well here. And so that has been kind of the larger consideration, regardless of the stock fluctuations that we've seen most recently here too.